When will the housing market crash and it become a buyer's market? Hold that thought, experts warn. More on that in a minute. Hi everybody, Joe Hillner with your Home Sold Guaranteed Realty, where we will sell your home for just a 1% commission, guaranteed. Every week I share market data to keep you informed with the local real estate market. Here is this week's Boca Market Watch. First up, single family homes. This past week, 50 new listings, pretty decent, and ranging in price from $425,000 to $14.6 million. 16 homes back on the market, 8 homes listed took a price decrease, and 6 sellers actually raised their asking price. And another disappointing week with only 35 different properties under contract and 33 going pending. 22 homes unsuccessful in selling and taken off the market or expired outright. And a poor week for sales with 45 homes closed in the past week, ranging from $315,000 to $3.3 million. Next up, condos and townhomes. 59 new listings, not bad, and ranging from $125,000 to $1.8 million. 13 units back on the market, 12 properties with a price decrease, and 7 sellers raised their price. And a very good week with 68 different properties under contract and another 52 going pending, including one of mine for 105% of asking price the very first day on the market, cash. And 26 condos or townhomes unsuccessful in selling and taken off the market or expired. 62 closed sales this week, not too great, and ranging in price from $71,000 to $1.7 million. And here's what's making news right now. For prospective home buyers who weren't lucky enough to get into the game before the pandemic, the hope of a housing market crash may be the one thing to hold on to following month after month of rising prices and quick sales. Maybe prices will bottom out, suddenly making home ownership more affordable and attainable. Generally low inventory leading buyers to settle on rushed decisions, bidding wars helping push up record high housing costs. Numerous millennials in the country's biggest home buying age are being priced out of markets across the country. Are these the indications of a housing bubble? Emily Long with lifehacker.com is reporting the following. Unfortunately, it's tough to predict what's to come. Conditions today are completely different than they were prior to the 2007 housing crisis, so we can't use that as a benchmark. In fact, many experts believe that we'll be in a seller's market for a while. Housing supply is still extremely low, and even if price increases don't stay in double digits, they're also unlikely to reverse. Rising interest rates that make borrowing more expensive could cool things off a bit, but a crash is probably not on the horizon. Even though we anticipate an increase in homes hitting the market early this year, due to the fact that there are the most homes under development since before the Great Recession, we still expect more purchasers to be priced out because of currently excessive prices and increasing mortgage rates. Financial specialists told Inman News they don't predict a revisitation of what has customarily been known as a buyer's market anytime soon. Sellers stay in the driver's seat, and business analysts told Inman the nation actually has a long way to go to settle into possibly better approaches for contemplating about just what is a typical housing market in the modern age. What is a balanced market anymore? The conventional view is that a market is in balance when there's a half-year stock of inventory in a given region, meaning it would take half a year to sell out all of the currently accessible homes. My statistic has always been 5.5 months, so pretty close. In my opinion, I just have a hard time imagining that we would ever get back to a 6-month supply anytime soon. Can inventory catch up? Good question. Emily says, if you look at demographics, you can say that the current level of construction is pretty close to normal. But what that doesn't tell you is how far behind that total supply already is. Home developers last year reached a level they haven't since 2006. Last month, 1 of every 3 homes on the market was a new build, according to a study by online brokerage Redfin. However, the size of the backlog and the time it will take for these homes to hit the market will take time that the markets just don't have to supply the demand. It means the markets actually have quite far to go. Rates are rising, so will buyers get the edge because of that? 10 years ago, if you were to tell a prospective buyer that the interest rate would hit 3.5%, they'd be lined up to lock in those rates. Different world, right? Emily said, interest rates rising is going to probably pull some people on the margins away from buying at this time. That might have some impact, especially in really expensive markets. Historically, interest rates were in double digits before, and people still bought houses then, she said. Generational demographics are still going to be at play. Millennials are a huge generation. They're still going to be trying to buy homes now and a few years from now. The takeaway? The increase in inventory that some forecasters predicted just hasn't happened yet. Acceleration of home price appreciation has gone up, and inventory has continued to drop pretty drastically. So it's a lot tighter and more competitive at this point than ever before. So predicting an end to the ongoing seller's market may be a lost cause. The bottom line for now, it's still a seller's market. The public recognizes that, and they're not letting it deter them. And in our market, the status quo is full speed ahead. Okay, that's it for today. If you'd like some specific market data on your neighborhood, just give us a call at 954-799-6867. If you're watching this on my YouTube channel and you like the information, please don't forget to hit the like and subscribe buttons below. So until next time, this is Joe Hillner with Your Home Sold Guarantee Realty, signing off for now. Go serve big, everybody. Be nice to each other, and I'll see you next week.